reports 147,000. So a big beat in terms of where we got those June payroll numbers. That is, again, versus the 106,000 that economists had on average been estimating. The unemployment rate falling to 4.1% from 4.2% the prior month. And again, that is lower and therefore better than estimated. Also, average hourly earnings a little bit weaker than estimated, rising 0.2% month over month and 3.7% on a year-over-year basis. The labor force participation rate ticking down by 0.1%. I know that's something that a lot of economists have been focusing on as well. And by the way, that change in non-farm payrolls in contrast with the manufacturing payrolls, which fell by 7,000 versus the 2,000 that had been estimated by economists. One of the other things that we've been watching for that I didn't mention is the effect of the tariffs. How will that be trickling through to not just the manufacturing economy, but beyond that, the sort of services that surround the manufacturing economy? So there, again, we saw some weakness. If we look at what we're seeing in terms of the market reaction to these numbers here this morning, as we talked about before, the numbers, little change. We are seeing a little bit of an upside here to futures versus where they were before. Not a huge jump by any means, but a little bit of positive reaction. We tend to see that kind of ebb and flow throughout the morning as people take a closer look at the numbers and try to suss out exactly what they mean. We also are seeing a little bit of an increase in Treasury yields, which is interesting as well, given that this will feed into the debate around the Federal Reserve as well and what they will be doing next.